I hope you guys are doing well out there. Let me get the chat set up. Look at my hair, looks like let me try to change my back. It's probably still gonna look like that. Hold on. Let's go with the green trading. There we are. Now it looks like I got like the alpha sprout coming out. Hang on, let's get this set up here. Everyone, everyone, and let's throw in a hello, everyone. Happy Wednesday. Hump day. How's everybody doing out there tonight? Who's in the house? Jackie is here. Jackie, I got my ginger ale and cinnamon. You can't really see it. Who else is out there tonight? Hey, Tammy. George, I'm assuming you're there too. Hello to you. Hope you both are doing well. Anybody else want to say hi? You stairs are in the house. What? Thanks for being here. Excited. Ready to talk some chart patterns this evening. What? Anybody else want to give a hello? And if not, that's fine too. I'm not going to pressure you. Paulo, P-Rod, my man. Hey, what's going on? I hope you're recovering. Did you get your 25,000 steps in? Nice. You're a beast. You're a beast. Yeah, I'm sitting here looking at the clock, and I'm like, all right, well, th those 4 a.m.s come around pretty early here. Oh, you had to break it up into three mile. That's awesome. Love it. Pushing the limits, pushing the limits. All right, everybody. Well, thanks for being here. Let me pull up the slides and we'll get going. And this is session 28. Cannot believe it. Session 28 of the blueprint. We've been rocking since January. We have what, 17 more to go. We are going to be meeting this Saturday, 6 a.m. for those who want to join. We'll be here. If not, there will be a recording for you guys to access. The recordings will be always be available for you guys forever. You'll have those. So I do need to put together a master list just to send out like, here's all 28 sessions so far. So the guys have that. I got a request for that last week. I haven't done that, so I need to put those together. Um, so that will be coming. So you'll have all those together. Bill and Heather say, "No, you look like a Cupid doll." Yeah, I need to like move it up in the corner. So I have to create that graphic. I haven't done that yet. So. Well, tomorrow at 4 a.m. I got something to do. But yeah, so I'll have all those videos available for you. So you guys will have this library of everything that we've covered. So that's all yours to access. So I'll be putting that together soon. And then just to go over upcoming dates, here we are. This is the remaining calendar for the rest of the year. So we're here tonight. And then again, will be Saturday for an early bird session. And then the remaining dates in September, we have the 10th and the 25th. So I don't have one scheduled the week that I'm doing the boot camp because that's a 3 night event. So I didn't want to double book myself because I'd be what I was originally going to do was do the boot camp and then roll into the blueprint, but that's kind of a lot. So we're gonna skip that week, but we'll be back here the 25th. And just to put a plug out there, if you have anybody who is interested in learning how to trade, please send them my way for the free boot camp. I'm going to be giving away some cash to get started in a trading account. So want to teach people this. So I would love to have some new faces there. If you want to come for a refresher, the more the merrier. I know some of you have done the boot camp multiple times. It's a lot of fun. And yeah, so that's the 15th, 16th, and 17th. And just some other, housekeeping notes here for everybody in the group and in the community. So I am going to be teaching a trading psychology class that is going to be free. So I typically do, the free boot camps during the year. I typically do like the three boot camps, and then I'll do like sometime around the end of November, I do a free class that's accessible to everyone. Last year I did Profit Pioneers, which is all about back trading. But this year I'm going to be reteaching the trading psychology class. So, if you guys want to be a part of that, please do. And then just some other things just to get you guys thinking about it. I am going to be doing the blueprint again next year. So if you're enjoying this model, that'll be available for anybody who wants to sign up. I haven't decided if I'm going to do like anybody who did the blueprint this year, there will be like a second version, like part two, or if I'm just going to do it all together. So that will be there. And then the last thing is and I've been telling you guys this too. I trying to build my one-on-one coaching for 2026 now, so that's all set. And then once I fill my seats, I'm locked in for the year, just because it's pretty time intensive doing the one-on-one coaching. So there are 11 spots left. So anybody's interested, just reach out to me and let me know. And yeah, so that's our schedule that we're looking at. And our final session, we're gonna do 2 hours. So that's gonna be fun. I got some surprises that last day. And I will say this, it's in December and you might be getting something in the mail. So that's all I'm going to say. And you might need it for the final session. So um, I'm not going to say anything more than that. So building some suspense. So yeah, so tonight we're going to continue with our study of chart patterns. And last week we did double tops, double bottoms, which are the basic entry level chart patterns. And I was going to try to squeeze four in tonight, but I think it's too much. So this evening we are going to hit the head and shoulders pattern. So there's the head and shoulders and there's the inverse head and shoulders. So not only am I going to teach you the pattern, show you examples, but I'm going to show you how you can trade them, a conservative entry point, an aggressive entry point. So we'll cover all of that. And then we will take a look at the broader markets like we always do, and just kind of talk about where we are, where we're headed. And we could look at some charts if you guys want to look at charts, any questions that you have. So we'll start with the content first, and then what we'll do from there is move into the broader markets and questions. If the group is in agreement with that, again, because this is a democracy here, I want to make sure that that's in alignment with what you guys need. And here's what I would tell you too, is if you have questions about tickers, I think somebody asked me the other day, I think it was Paulo, um, if you have a question that you want me to address, think about it or write it down, or something comes up when we're going through the lessons. It doesn't even have to be what we're covering. But just whenever we get to that Q&A session, bring it up and I'll cover it for you. Even if it's something unrelated to this and it's something different, take advantage. I'm here to help you. All right. So is everybody good with that structure for this evening? All right. Yes. All right. Let's go. Let's go. All right. Hey, I will say, all right, you guys know I'm a Steelers fan, right? I haven't been this excited for a season in a long time. And I know Aaron Rodgers is a polarizing figure, but I'm excited. And we play the Jets at 1 o'clock, and I live and die with my team. So if they lose on Sunday, I better have a nice big old trade on Monday because I'll be sad. So just throwing that out there. Yeah, let's get those terrible towels. That's right. All right, here we go. I'm gonna jump in here. All right, so here we go. Chart patterns, and we're starting with the head and shoulders. So we did double tops, double bottoms, and I'm gonna cover a ton of patterns for you. So we're just gonna do two tonight. I think if anything more than that, it's just gonna be overload, and I'm not gonna be able to go into detail. And I really want to dig in. And this is gonna set the table for what we're gonna do on Saturday and in classes thereafter. But as you can see here on my screen, I have this is a head and shoulders pattern. And look, I drew that with a marker, right? And head and shoulders, I always think of the shampoo, right? And I think of I'm letting my hair grow out. So it is crazy because I always have like the buzz cuts. But this right here, this is what a head and shoulders pattern looks like. All right. And when we talk about a head and shoulders, we this is the formation. So remember the peak trough terminology that we talked about last week with double tops and double bottoms. Okay. So this pattern, we have a peak that creates the left shoulder. So right there is our peak. That is the left shoulder of a head and shoulders pattern. Okay. Then from there, the higher peak creates the head. So here's our higher peak. This is our head of the head and shoulders pattern, right? I just noticed I'm using green and red here. Christmas. Can't wait. I love Christmas. And then we have a drop, and then we have another push up, and this peak creates the right shoulder. So this one right here, this is the right shoulder. So I want you to think about the sentiment here and the thinking behind this. You have the bulls pushing the price action up, the bears drop it. The bulls push it up again, and it makes either an all-time high or a recent high. And then what happens? The bears jump in, they drop it down. Then those resilient bulls push it back up. And typically, and not all the time, it will be symmetrical with that left shoulder. Bears will jump in and drop it again. Now, like we talked about with double bottoms, those shoulders are not always going to be symmetrical. Sometimes they will be, but sometimes you'll get something like this. You'll get a higher high over here. Then your right shoulder will be higher than your left shoulder, or sometimes that right shoulder will be lower than the left shoulder. Again, what I like to see weakness forming, and that the smaller that right shoulder is, shows that the bulls are losing steam. All right. So that's the pattern. Two peaks, all right, or two shoulders. Um, we get those troughs that come after the peaks, and then we have the head, which is in the middle. Okay. Now, similar to what we talked about with the double tops, double bottoms, is your troughs. And we have a neckline. So the neckline connects the trough. So right here, this is the low, this is the low. When we connect those, that gives us our trough, right? And what we want to see is a break down below that trough to signal confirmation of the pattern. So when we close below that neckline, that tells us, hey, this head and shoulders is in play for the downside. I'm going to show you two ways that you can trade this tonight. One conservative approach, one aggressive approach. And what we want to look for when we're looking at this pattern and when we're looking at volume is we want to see the bull volume begin to decrease, right? So bulls are pushing us up. You'll probably see a spike in volume. But as they're trying to push it up again, this is where we should start to see that divergence and that bull volume decreasing. And that just gives us greater confidence that we're going to see this pattern breakdown and we're going to see a drop. Okay. And then again, break of the neckline confirms the pattern. So that's that's the head and shoulders pattern. All right. So a lot of the terminology and concepts from double tops, double bottoms are associated with this pattern here: peaks, troughs, necklines. So really, if we were to create like a family tree, maybe I'll do that. Your double tops, double bottoms, and your head and shoulders, inverse head and shoulders are all part of the same family in terms of terminology. Okay. So let's dig into this a little bit deeper. All right. In terms of the head and shoulders, they are highly reliable patterns because they're not as frequent. You're not going to see these as frequently as you would double tops and double bottoms. And right now on the charts, when we look at the broader markets tonight, you're going to see that there are quite a few tickers right now showing head and shoulders patterns. Okay. So we want to pay attention, and that's why we want to be on alert, especially right now, seasonality, September, right? Because, we could get some weakness, we could get some selling. Okay. So, here's an example of what this looks like, how it plays out, how it breaks down. Again, bulls push it up, bears drop it, bulls push it up, bears drop it down, they push it up again. And you'll have a couple different ways people will draw out the necklines. Um, sometimes you'll have the neckline drawn down below those troughs from these peaks. And that makes it a little bit stronger of a confirmation. And I'll show you examples of this. But the way that you're going to see most people identify the neckline is right there at those troughs. There's another way to do it by making the neckline lower. That just makes it a little bit stronger in terms of confirmation because you're seeing a further drop. But the standard way is drawing that neckline here at those troughs. All right. Now, in terms of the movement that we should get from a breakdown of a head and shoulders, so we're assuming the neckline is down here for the sake of this diagram. If you measure from the neckline, right? So that's where this green line is, to the top of the head, you should get a symmetrical move lower. So what do I mean by that? So when you measure this out, if we took a ruler on TradingView and measured this out, right, the distance here, the drop should be that same amount. All right. So the movement for head and shoulders should be at least 1 to 1 before retracing. Okay. So what does that mean in simple language? Well, for a head and shoulders to be successful, it will break down and move the length from the top of the head to the neckline. All right. And typically, if it's a really strong move downward, you'll you'll come down, you'll hit that 1 to 1, it'll retrace and make it look like it's going to pop higher, but then it'll break down. And that's where you'll start to see bear flags, rising wedge patterns, which we're eventually going to get into. Um, and then you'll get further downside. The other thing that you can see too is before it will fully come down and do that full 1 to 1 dump is you'll get something like this. You'll come down, you'll retest the neckline first, and then you'll get the full 1 to 1. And in those cases, you're not going to get a full retest back up to that neckline typically. In these types of instances, you'll drop, retest, and then you'll continue lower down to that 1 to 1. And then from there, you might get another retracement, and let's say that we're doing a day trade, you might hit the 20 or the 50 EMA and then continue lower. Okay. But when we're trading this, and let's say we're setting up our P&L tool, your target should be there should be at least enough room to get a one-to-one target. Now, we go for at least 1.2, but we at least if it's going to be a successful head and shoulders, it should at least give you that full one-to-one move. Okay? So that is the head and shoulders pattern. Now, uh entry points. How can you enter a trade? Because there are people who will just exclusively trade head and shoulders, or it's part of their strategies. So, and this is where you can diversify what you do and how you approach your trading. So, there's two different ways to do this. So, you could be aggressive. So, let's say that you have an edge and you feel like there's weakness coming in the market and you're ready to get short on something sooner rather than later. In that case, what you could do is instead of waiting for a break of the neckline, you can short at shoulder number two. All right. So when you see this pattern forming, that first shoulder is created, it dumps, it comes up, creates the head, and it drops again, and then it starts to rise back up. You could say, hey, I'm going to enter here. I'm going to be a little bit aggressive because I have faith, or you have an edge, you have evidence, you have sentiment that says it's going to drop lower. All right. So that's if you really want to be aggressive in a head and shoulders play. If you want to be more conservative in trading a head and shoulders, then what you want to wait for is a break of the neckline. All right. So just like your double tops, when you come below, you close below that neckline, that's your entry point. It's the same thing. When you close below the neckline of a head and shoulders, that's where you can enter and take it short. All right. So that's the more conservative approach because you're actually getting confirmation from a close below the neckline. So, two different ways that you can play them. And then what's powerful, again, this is where you start combining things. Let's say you get a trap VWAP with a bull candle under the 10 and you get the VWAP crossover and you have a head and shoulders, then you have it's what's the chef's kiss, right? A perfect setup. And then you have that declining bull volume, you're stacking that evidence, you have great confidence that that trade is going to work out. All right? So, here's an example from the Qs, and this was from 2024, but you could see here this pattern forming, this head and shoulders pattern forming, um, heading into the end of the day. But you can see here, and let's get some audience engagement here. What is this part of the pattern called? Shoulder one. Yep, left shoulder. Peak. It is a peak. How about this guy here? It's the head. And then this one here, right shoulder, right? So we have our three components of a head and shoulders, and we have our neckline right here. We're connecting these troughs right across. Okay. So there's our neckline, money train. And this one you would have had to been pretty aggressive to catch this one just because look at this big old bearish engulfing candle that came in here. So you probably wouldn't have had the setup. Although you could have just put a stop limit entry in your broker here to catch it. If you saw this neckline forming, you saw this peak being made, you could have put an entry right here. It would have been around. Wow, this is back when the Qs were trading at 419. Remember that? So you could have had that entry set up, and if you would have, you probably would have got skipped with that big bearish engulfing candle, but you got the dump. And then notice too, this comes down and retraces and then comes down, and that's a one to one there, right? So the conservative play here is playing the neckline. The aggressive part is playing this shoulder, right? Entering here. Okay. So that is that's an example of a head and shoulders pattern um, on on the chart, showing you the different components of it. And again, these are very, very high probability. And then just kind of looking at the technicals too, you could see right here when we're looking at the RSI, it's overbought when you're making these peaks. So you know it's gotta come down, and then we see that that relieves itself as it starts to drop. All right. So that is our head and shoulders pattern. Any questions about the head and shoulders? Head, shoulders, knees, and toes. I was just talking. I when I took my son to bed, he's in kindergarten, so I was like, "Buddy, tell me about kindergarten." And he was telling me about his friends, and I was like, "Do you guys sing songs?" He's like, "Yeah, we sing some songs." Are these better short time or long time? You can use any time frame. So Head and Shoulders works on for day trades. It can work for swing trades if you want to go short, and if you don't want to go short shares, you can buy puts to capture the downside. But yeah, they work on all time frames. Hmm. They do, and you can find them 3 minute, 5 minute, 15 minute, hourly, any time frame you can find it. Yep. So that is the Head and Shoulders. Okay. And so just continuing on, again, we're yeah, double top, you flip it over, it's a double bottom. Well, hey, Head and Shoulders, you flip it over, you have an inverted Head and Shoulders. All right. And Head and Shoulders is bearish, inverted Head and Shoulders is bullish. So bottoming patterns here, right? Similar to double bottom. Remember, they're all part of the family tree. And wanted to uh let's just go through here. So here, since we're flipping it over, we have our, you could call this a left shoulder, or you can call this the trough, right? Trough one, and then the bulls push it up. We get a peak. Bears drop it down. Here's our head. Here's our lowest peak, right? Bulls push it back up, and then we create this peak. Bears press it back down. Here's our right shoulder. And then we have our neckline. We close above it, and then we go. All right. So the left trough creates a left shoulder. So that's here. The lower trough right here creates the head, and the right trough creates the right shoulder. Neckline connects to troughs. And similar to the Head and Shoulders pattern, we would like to see the bear volume decrease from trough to head to trough. Doesn't mean we're always going to see it, but that's a good confirming indicator. And then a break of the neckline says that it is on. Okay. So it's just the inverse. It's just the flip of Head and Shoulders. So if you know a Head and Shoulders, then you know what an inverted Head and Shoulders is. Okay. So again, once we close above that neckline, we confirm the pattern, and we move higher. Again, we want to connect those peaks. That's our neckline. Like I said, sometimes you'll have some people who will make that neckline a little higher just for greater probability, greater confirmation. And again, this is just, we're just flipping this over. The same thing that applies to a Head and Shoulders applies to inverted Head and Shoulders. All right. So we should move 1 to 1. So measuring out from the top of that head to the neckline, we should get that same move up here. So it should at least be 1 to 1. Uh, and like I said, with the head and shoulders too, you're going to get some type of retracement. Sometimes it will push higher. You'll get that 1 to 1, and then you'll get a dip before it goes higher. But most of the time, at least from my experience, what I see is you'll push, you won't get that full drop right away. You'll get that small retracement first, and then you'll hit that full 1 to 1 movement. All right. And then just moving here. Entry points, the same thing applies to an inverted head and shoulders. You could be aggressive. And again, if you have that edge or you have confidence in the trade, if you are in the zone, in the flow with your trading, and you feel very confident in the setup, then you could be more aggressive and enter at the second shoulder. So when this drops down and creates this trough here, you could enter here and be more aggressive so that you're capturing more profit versus the conservative approach, which is waiting for the break of that neckline to then catch that move. Uh, and so again, you can just exclusively trade or have in your trading arsenal, hey, I trade inverted head and shoulders patterns. And based on what the charts are showing you, what's happening in the broader markets, when you see this pattern, if you're very confident in it, you might say, I think there's room for this to really go. I'm going to enter in a more aggressive entry point, and you're going to take it from that shoulder. All right. And here is an example. This is Mr. Roku. And again, remember the patterns aren't always going to be nice, neat, and clean, textbook, symmetrical. They're going to be funky, right? But what we're looking for in the inverted head and shoulders is left shoulder, head, right shoulder. So you could see here on this chart on Roku, we drop, we create the left shoulder. Bulls push it up, the bears drop it back down, we create the head. Bulls push it back up, bears say, they try, they drop it down, we create this right shoulder, and then we have our neckline here. We push above it, and you actually get some consolidation along that neckline here, and then it starts to break out, pushes up, consolidates a little bit more, and then starts to go. All right. The more aggressive entry, where would that be? If we wanted to be aggressive, we had confidence in the setup, where would our more aggressive entry point be? Here on this trade, the right shoulder, right? Yep. So you can enter right here if you are super confident and take a more aggressive approach. If you were more conservative and you didn't 100% trust that you had confidence in it, but you wanted to be protective, then you wait for the break of that neckline, right? And when you're seeing that consolidation on that neckline, you're thinking to yourself, oh man, the pressure's building, pressure's building. You see that little pop, you're like, oh man, is that it? And then the pressure's building again, and then bang, you get that big old bearish engulfing, and then this thing just moves. All right. So those are the head and shoulders patterns, head and shoulders, inverted head and shoulders. Like I said, when we look at the broader markets tonight, we're gonna see some of these. Um, so questions about those two patterns. That is funny with the no questions. Guys feel pretty good. All right, I'm gonna take the silence for you guys feel good about it. Um, so you can draw. So there are going to be times, and we'll see if we can find one here tonight, where if it's not, if you have non-symmetrical um, shoulders, and then the neckline can be it can be on an angle. Yes, so that can be the case sometimes with the pattern. Yep. Um, if the peaks or troughs are even, we're yeah, so it could be on an angle. So that references Jason's question. Hmm. Is there a time where you can see a Head and Shoulders? Yeah, so there will be times where the pattern could form, and here's the thing, where it's invalidated is if you get a close above that head again. So let's say that you get a Head and Shoulders form, that right shoulder forms and it starts to break down, but then it starts to creep back up. As soon as it would take out the head, then it's going to invalidate the pattern, because what you're doing is you created a new high and you took out the high that was at the head of that pattern. So that would be a case where yeah, it's not going to work out. It's been invalidated. Hmm. Yeah. So again, in trading, and it's funny, somebody put a comment on one of my YouTube videos where he's like, I can't remember exactly what it was, but I was like, that'd be a good video topic. He said something along the lines of like, this is great advice, but doesn't it doesn't always work. Well, in trading, nothing works 100% of the time, right? That is just it happens more often than not when you know what you're doing, but it's not 100%. And that's where the trading edge comes in, right? But let's take a look at Wolf, and even Broadcom right now. Um, there is a Head and Shoulders pattern on that one, but it's close to being invalidated because we had a little bit of a pump on it today. But here's Wolf. Um, so right now, are you on the daily, Paula, where you're seeing the Head and Shoulders day chart? Um, I wouldn't necessarily call. I mean, I could see what you're saying here. Zoom. All right, let me see. Over this one, July 2024. This guy. Yeah. Yeah. No, this is a Head and Shoulders. The other thing too, and I said this last week, not all double bottoms and double tops are created equally, meaning some are going to move better than others, right? The same thing applies to a Head and Shoulders pattern. So this is kind of a funky one here, but you do have, here's your left shoulder. Uh, we drop, and then you push up here, drop, and then this here breaks this high. So you couldn't, because this is breaking above this high here, it invalidates the pattern. You could make the stretch to say, because when I first looked at it, I'm like, yeah, it kind of looks like one, right? You're seeing this, and it does break down, but because you're breaking that high, it invalidates it, so it's not a true Head and Shoulders. That's just more of a stair step higher. It peaked out, made a high, and then it just dropped. So that would not be, and that's very good point. That's a great chart to point out there, because that's an example of where that high gets taken out and it invalidates the pattern. And it's almost more like a, honestly, double top, right? Lower high, higher high, neckline. drops below it. But that's a good chart to look at. Let's look at so I was talking about Broadcom. So when I did the preview video this Sunday, I talked about how, all right, this thing's extended up into all-time highs. You have your left shoulder head and you have your right shoulder. And right now, the Bears dropped this down, bounced off the 50, and you got this push up today. So now, if we take out this right shoulder's high and then we start to come up and we take out the high of this head, then the pattern's invalidated. But you could still have something, let's say that it does that. You could still have essentially what it would become is a double top. But that doesn't mean it's going to break down either because it would still have to come down and take out that neckline. And if it does in fact take out that high, that is its all-time high, more than likely it's just going to grind higher. Yep. So so yeah, yeah, those are Head and Shoulders. I think there's a couple other, let me see in the Mag 7 if I had any. I know Apple definitely doesn't have one. Tesla doesn't have one. Chemours doesn't have one. Look, how about Google, guys? Jeez. Palantir kind of does. It's funky. Um, but I don't know if you could really call, I guess you could say, and this is where the pattern's not going to look perfect, but you could make the argument here. Here's a left shoulder. Here's a trough. Boom. Here's your head. Drop. Here's your trough. Here's your right shoulder. Here's your drop. And here, when we were talking about when it's not perfectly, straight, you're just drawing on an angle, right? So there's our neckline. And for this one, this has quite a bit of room to go to take out that high to invalidate it. So we have just a little bit of a retest here, but this one could fall and drop. So we want to watch to see, hey, can that neckline be taken out? Now, here's the other thing too, that I have this chart pulled up here, is this is where you're starting to put together other pieces of information. So let's say this thing does come down to the neckline. Well, more than likely, if it does, this 100 is going to be coming up as well, right? Just because as the day goes on, the moving averages move, right? So there's going to be some support here with that 100. So this is where using other parts of your chart can help you confirm what you're seeing, right? And then we also see you do have some decent volume here on the VRVP. So if it would take that out, then you would probably see a big dump on Palantir. I don't think this one is going to play out because this has been so strong. And two, you're getting a lot of consolidation here around that 50 SMA on the daily. So you really want to evaluate the pattern in the rest of the chart to make sure that the other information is confirming what you're seeing, right? So you might spot a Head and Shoulders or an inverted Head and Shoulders, but if you're not seeing the other evidence support it, then you want to be cautious. You want to have confidence in the trade that you're about to take. Okay. All right. So that's Head and Shoulders. So let's get into some broader markets here. Just kind of talk about where we are. So here's the SPY. The SPX. I pointed out how we had this gap right here. So we gapped down, and I marked this with the line, and we did fill that gap. If we come over here to the 3-minute, look at this. We gapped up, and then right here, and this is why gap fills are so important. We came down, and at 11, was it 11 a.m.? Yeah. My times are off on my charts. I don't know what's going on with them right now because that was not 11 a.m. That was in the afternoon here, Eastern time. But you can see we broke down below it here, consolidated, came back down. But notice how the price action just kind of clustered around that gap fill. And then as soon as it filled that gap, what happened? Bang, this thing ran out of there. All right. So that's a pretty strong look for the bulls. Gap down, double hammer candles. So that says to me that the buyers are still interested here. Now there is a volume node here that is in in above us that we're going to have to break through. And we do have some important data coming up. We get ISM services tomorrow. And what else is tomorrow? I think that might be it. Let's see. I think we get Challenger job cuts, ADP employment. They're two bar and one bar, but it's just going to tell us a little bit about the labor market. We'll get initial jobless claims, but it's going to be that ISM services at 10. That's going to give us the market, some market movement. But the big one is right here. It's Friday, non-farm payrolls, unemployment rate. And unemployment rate is supposed to tick up a little bit. That tends to scare the market. So we just want to be cautious here. I think we have a chance to push higher tomorrow. Friday, all bets are off in terms of what happens. If that unemployment rate is hot, then we could see some decent weakness in the market. So just be prepared for that. But it's a strong recovery. And the other thing too, when you look here, you can almost let me take this gap fill line. And if I put this line right here, you've got this support. So for whatever reason, this area here has functioned as significance. There's significance to this price. So this 663.40 range, the bulls have stepped in to buy. And so really it's now we've made new all-time highs here, but this range we want to watch. Let's see, and we want to see if we're going to trade inside of a range here for a period of time. So potentially what we could do if we don't want to correct in price and drop further than 2 to 3%, then we'll just ping pong in this range. And that'll give time for those moving averages to catch up to where the price action is. So we might see something like that, but let's wait till we see on a Friday what happens with the unemployment. And then just taking a look at the Qs. So there is a head and shoulders here on the Qs, but again, you got a bounce here today. So we just want to see what's going to happen. Is this just a little retest and it is going to break down? But again, we want to watch to see if that high gets taken out. And if it does, then the pattern's invalidated. But you did get a nice pump in tech because of the news with Google and Apple. Um, the antitrust case was thrown out against Google. They were going to have to break up their different sectors of their company. They don't have to do that now. So that made Google fly. So if we look at that chart, I mean, what a that's a gap right there. Woo! So that one was a big mover, and then you had Apple too. Just a great move, and Apple's probably going to hit 260 sooner rather than later. So saw quite a few things pop, and interestingly too, you did see the 10-year drop, and this trend line is in place here. I wanted to see if we were going to get multiple touch points. This started back in April, and we have here recently. But to me, what this looks like on the 10-year is it looks like we're going to break this sucker and we're going to come down. So I don't think I don't think that's going to hold, and that should be bullish for stocks. But the only thing I would say is I believe the last few times we've seen weakness in the labor market, we've seen the 10-year fall. So let's go back to that flash crash of 2024, which was in August 2024. Let's see if that dropped. No, that's 2023. Bear with me here. Here's 2024. Here's August. Okay. Yeah, so notice how the 10-year dropped on that flash crash. So history tends to rhyme. And I'm not saying that we're going to see weakness in the unemployment rate on Friday, but we started to see weakness come in before that unemployment rate came in August 2024. We had a huge sell off. So just be ready. And if I'm right, remember this video. Um, if this falls a little bit tomorrow, um, and I'm talking about the 10-year, my spidey senses will be up that the bond market knows something about the unemployment rate on Friday. So I think it's going to break down through here. Again, it's typically bullish for stocks, but just that historical precedent with the unemployment rate, it's something worth monitoring. And then just coming over to the VIX, it spiked on Tuesday, but then came back down today. It's probably going to come lower again tomorrow, but um, we're the bulls are just strong. I mean, there's nothing to say. The dips. I mean, look at these dips are nothing. The biggest dip we got was August 1st, right? This little correction here, what, 3.37%. And then we had this one here. You can't even call that a correction, it's just a dip. This one here was 2.1%. This one here, 2.3%. So until we see otherwise, and I want to see one of these longer term moving averages broken before I'll believe in any type of correction. And right now it's all just noise. It's fear mongering. I don't see it, but who knows? So anyway, any questions, guys? Any charts you guys want me to look at? All right, Mara and Chamors. You got it. Give me 1 second here. Mara. Oop, Mara. Let me delete this stuff off here. So, Mara, this is I mean, that kind of looks like a Head and Shoulders there, doesn't it? Um, this is a frustrating stock. So, I mean, this thing really has just been it's been range bound, really. I mean, you had these highs here, 34.30. What was this? Let me see, move these things out of the way. This was 2024, February 2024. And it hasn't really got back to those levels. It got into the 30 area during the election time here. Yeah, November 29th, 2024, but wasn't really able to hold on to that. And it's just been a pretty frustrating stock. I own this in my long-term portfolio because when you look at this in terms of its all-time high, you can see it's up here at 233, which is hard to believe that Mara was ever at that. Um, but this is just it's a slow, agonizingly slow stock. But if we look over here to the left, we can see that it's kind of chopped around in this range for quite some time, even going back to April of 2024. And it typically will stay in that range, and then you'll get those pops out of there. And you had the big dump in April. You did have a bit of an inverted headed shoulders here, broke out, but it really gave it all back, right? A double top pattern here, dropped, and it's just sitting right there on the 100. What I will say, though, Jackie, is what do we have that's about to happen here? Anybody know what that's called? Mm-hmm. Jason, you are correct. That is a golden cross. So we got the 50 SMA on the dailies about to go through that 200. So let's see what happens when that breaks through because that's bullish. Um, and let's just see the last few times that it's happened here from Mara if it's produced any gains. So here the cross came and you got a little bit of a push and then it broke down. It gave it back, so that really wasn't much. Here you had a bottom formed and then the crossover occurred here. And then you got quite a bit of a move there. And then here, 50 through the 200, you got quite a move here. So that's a good spot, Jackie. I didn't even notice that until I looked at the chart tonight here on Mara. So let's see. And we've seen some weakness in Bitcoin and crypto. Maybe it's getting ready to start pushing back up. I'll keep an eye on it. But the other thing too, you do have this larger, if we're looking at a larger pattern here, you do have what looks like a head and shoulders. Although what I would say is being that this just came out of those lows, you could make the argument here that, you just have a larger inverted head and shoulders. So I don't, I would just say, just looking at technically where this chart is, it's more likely to move higher because it's been consolidating. Even though that does look like a head and shoulders, the other evidence says that there's probably more likely move to a push upside, but it's Mara and it is agonizingly slow in how it moves. However, I am very, very intrigued by that golden cross. All right. And then let's take a look at Chemours, which I thought had a really nice setup for today, but they got some news that came out. Was it today? Let's see here. Well, it was 5 days ago. Their board chair resigned, and then they appointed a new board chair, Mary Cranston, and then I guess the markets didn't like that. They didn't like that appointment, and so you had a little bit of weakness coming today. But this ticker, I mean, this is well off of its highs. They're creating they have a cooling agent that works for AI chip servers, and they're working with Samsung. So that's a pretty decent partnership. But this thing it's above its 200 on the daily, and it's just consolidating. So it's above that moving average. And look here too, similar to what we were talking about with Mara, is you have the 50 starting to curl up to the 200. So that might take some time and we might get a little bit of a dip here, but this could be one where, let's say it does retrace, you get that crossover, you can get a nice push here. So it's definitely one that I'm watching. I was watching it today. I was trying to see if it gave an opportunity for a day trade, but it really didn't. If we're looking here on the weekly, we can see that weekly 50 is a point of resistance right now. So it's going to have to break through that. But once through that, then $20 is on the table, and that's $5 up from where we are now. And then taking a look at the monthly, you have quite a bit of room before you'd face any resistance on the monthly up to 26. So yeah, yep. So there could be some opportunity there on Chemours. All right. Well, kind of a long one here tonight, but I appreciate you guys and your questions and for being with me. It's always fun to talk markets. Let's see what futures are at real fast. Futures are up 6. Let's see what we get tomorrow. Let's see how Avgo reports, and it should be a fun day. But watch Friday. Um, just be prepared for what can happen with the unemployment rate. It's going to be fun either way. And even if we do get dips or correction, I think there is still room to the upside here. There's so much liquidity in the markets right now, that I think we're gonna keep going higher, and there's going to be opportunities. So, all right, everyone, I appreciate you guys so much. I will see you Saturday. If you need anything, just reach out. You guys have my email. You guys have my cell. I'm here to help you. That's what I'm here for. I hope you have a great evening, and I will see you next time. Thanks, guys. Go Steelers. Yes. Take care, everyone.